Kitco News, special coverage of the New Orleans Investment Conference, is brought to you by Uranium Energy Corps and U.S. Gold Mining.
Welcome back to Kitco News. I'm Jeremy Szafron. Here at the New Orleans Investment Conference, the 50th anniversary. Well, let's get right into the news. Russian President Vladimir Putin has raised the stakes yet again, warning that the war in Ukraine is escalating into a global conflict. In a televised address, Putin accused the United States and Britain of enabling Ukraine to strike deep into Russian territory with advanced weaponry. Actions he claimed could spark far-reaching consequences. Now, this follows reports that Ukraine used U.S.-made missiles and a British Storm Shadow missile to target Russian positions earlier this week. In response, Putin has signaled that the Russian military may target facilities in countries supplying these weapons. And of course, adding to the tension, Russia has expanded its nuclear strike doctrine, now allowing for strikes against non-nuclear states under specific conditions, a move experts say is designed to send a chilling message to the West. To unpack the biggest risks facing us into 2025, we're joined by Peter Schiff. Of course, Peter is the Chief Market Strategist of Euro-Pacific Asset Management. Great to see you, Peter.
Thanks, Jeremy, for taking the time to speak with me.
We got many things to get to, so let's jump into what's happening in Russia and Ukraine. Obviously, we have these U.S.-made missiles, British-made missiles going across. You know, there's a lot of conflict happening. What does this mean going into year end?
Well, it's unfortunate that things are escalating before Trump is able to, take the reins. I don't really know what it means. Hopefully, it doesn't mean anything. But you always have to be concerned about the prospect of escalation of war, especially when you're talking about nuclear powers.
Yeah. What does this mean for the gold price? I mean, we've seen it react. Is the war priced in here at this point?
I don't think war is priced in, but heightened risk is maybe being priced in. Gold had a pretty big bounce this week, although it was just recovering what it lost the prior week based on the euphoria over Trump and a lot of the, I think, misplaced optimism. But the dollar strengthened and gold rose despite that. In fact, this week, gold, or on Friday, closed at a new all-time high in terms of euros, in terms of British pounds. War is generally good for gold, not just because of the uncertainty and people buying it as a safe haven, but wars are inflationary because they're ultimately financed by money printing. And so the more inflation central banks create to fund wars, the higher the price of gold. Plus, wars tend to be disruptive of production. Maybe it disrupts supply chains or productive facilities. And so you get more money, you get less stuff. That's a real recipe for much higher prices.
Yeah. Is there any other top risks that you're looking at into 2025? I mean, we have a lot of changes upcoming here.
Well, I mean, I think more will remain the same than has actually changed, unfortunately. I mean, a lot of people hoped that Trump would have brought change during his first term, and he didn't. And I think when it comes to the trajectory of the debt, government spending, taxes, it's going to be more of the same. I mean, they're going to rearrange the deck chairs a bit on the Titanic. But at the end of the day, spending is going to run out of control. The deficits that are already exploding, budget deficits, trade deficits are going to get higher. And I still expect the end result to be a U.S. dollar and a sovereign debt crisis.
Okay, let's talk about that and unpack it, because obviously back in July, we had $35 trillion in U.S. debt. Today, it's 36. I mean, it's going at such a rapid pace. So what's your thoughts on this Department of Government Efficiency, this DOGE? Or was it going to take it all away?
Well, first of all, it's not really a department because it's not part of the U.S. government at all. It has no official role other than, being able to make recommendations to the government, which anybody else is free to do. I mean, there are plenty of think tanks around that have been doing that for years. There are even individual congressmen, like Rand Paul, U.S. Senator, that constantly makes recommendations of things that can be cut. They never get cut. In fact, the Heritage Foundation, they came out with their 2025 plan, and Trump ran away from that as fast as he could during the campaign because he didn't want to be associated with any of the cuts. Sure, it's easy to say, I want to get rid of waste, fraud, and abuse. Every politician is in favor of that. But the problem becomes when you have to identify the waste, fraud, and abuse, it has a constituency. Every dollar the government spends, somebody is benefiting from it. And if you threaten to take that away, that's a problem. And so it's very difficult to actually get Congress to approve any substantial cuts in government. Meanwhile, all the big ticket items are off the table. I mean, Trump ran not only did he say he's not going to cut Social Security, he's going to increase Social Security by making the benefits tax-free, which is the same thing as increasing the benefits. And so Social Security is off the table. Medicare, Obamacare, all that. He said, no, I'm not going to touch any of that. I don't think they're going to cut defense. I mean, the Republicans are going to vote for cutting defense. They may try to find some waste, fraud, and abuse, but again, that's just a drop in the bucket of the overall defense budget. And the fastest growing line item, interest on the debt, which is now $1.1 trillion, is probably going to hit $2 trillion a year by the end of his first year. So there's no way that you can even find enough cuts in the discretionary budget to even offset what you're going to get automatically from increased interest payments on the national debt. Then on top of that, Trump wants to cut taxes. And we'll probably get the tax cuts. And so that will widen the deficit even further.
Yeah, I mean, looking at this gold forecast into 2025, we have a lot of things taking place here. We're just getting started. We're kind of in the in-between bit, but what's your outlook?
For gold?
Yeah, for gold.
Well, I mean, I don't know how I could be anything but positive on the price of gold. I mean, first of all, if you look at a chart, we're in uncharted territory. There is no resistance. So it looks like a big breakout. Gold went through a long consolidation from 2011 to 2024, where it kind of traded between 1,500 and 2,000 up and down. But that was after the big breakout from 2001 to 2011, where gold went from sub 300 to almost 2,000, about 1,900. So we've consolidated those gains. We broke out this year. I don't think gold's going back to 2,000. I think that's a history now. And we're off, to much higher levels without any resistance. So I think the price of gold can double, can triple from here, and potentially go much higher than that.
Were you a little concerned about how fast it went up? I mean, were you looking at a consolidation? It seems to be healthy here.
Didn't go up very fast. I mean, it was a big move. In fact, prior to the election of Trump, we were on track for the biggest percentage gain in gold since 1979. Now, we still might get back on track for that. Depends on how December goes. But even if it's not as, the best since 1979, it's one of the best years. Gold's up about 30%. And more significantly, so far this century or millennium, since January of 2001, gold has outperformed the S&P. In fact, it's outperformed all the major stock market indexes. In fact, you can go back to 1999 from the bottom of gold, when gold was, close to 250, and it's outperformed everything since 1999. So you're talking about close to 25 years where gold has beaten the stock market, yet there's no euphoria for gold. There's plenty of euphoria in the stock market. Nobody cares about risk there. But take a look at what's happened to gold stocks. Gold stocks are still down 15% from where they were 2 weeks ago. Just before Trump was elected. Gold itself is down less than 3% from its peak. And it's barely down. I think it closed Friday at 27.15. When Trump was elected, maybe it was $27.50, down $35. That's it. Despite the rise in the dollar.
So what's with the equity prices in terms of the, you were looking at the mining stocks. They haven't caught up. Some people say it's just because it's a margin crunch. Why?
Well, I just think there's not a lot of conviction in gold. And I think that the investors who might normally be buying gold stocks, are buying Bitcoin ETFs, or they're buying MicroStrategy. Remember, retail investors have been selling gold all year. And the selling was particularly strong early in the year when people thought that 2,000 was the top, and so people wanted out. The reason the price of gold has been going up is because foreign central banks have been buying. And obviously they know something that the typical retail investor doesn't. They're wasting their time on fool's gold, but they're buying the real thing. You do probably have the Chinese, consumers. They're buying, or in India, but in the U.S. and Western Europe, there hasn't been the interest. There's been more skepticism, and so we keep climbing that wall of worry. I think at some point the price of gold is going to rise high enough that the greed is going to start to replace fear in the market. And then you're going to start to see investor interest really picking up in the mining stocks. And I think they have a long way to go just to catch up to where they should be, let alone to get ahead of the curve, which ultimately they will. The gold stocks will start anticipating higher future gold prices and pricing that in to the present stock price. So we haven't gotten anywhere near that yet, but it's coming.
You think next year?
Maybe.
Hopefully.
I mean, I own a lot of gold stocks,
Right.
but, it helps me that the prices stay low because I can get more clients on board to buy. But, the problem is some people lose confidence and they jump off the train because they're tired of waiting for it to leave the station, and they get distracted. So I know the sooner that we can start to see this move, the easier it'll be for the people who are already on board to stay there.
I got to pivot over to Bitcoin in this reserve. I mean, Wyoming Senator Cynthia Lummis wants to sell gold within the reserve to buy Bitcoin, start a Bitcoin reserve. What's your thoughts?
Well, I think that's basically treason on the part of Lummis to try to say we should squander our gold assets on Bitcoin. It'd be one thing to just even recommend buying Bitcoin, but to say to pay for it by selling our gold. But, she wants to say it's not going to cost the taxpayer money because we're just going to sell this worthless gold, that we, just gathering dust at Fort Knox. We'll just sell that. But, of course, it's going to be highly inflationary because now the people who own Bitcoin, who sell it to the U.S. government, have a lot of cash to go out and buy stuff. But at the end of the day, Bitcoin is not a viable reserve because what makes gold a good reserve is that if the U.S. government ever needed to sell the gold in an emergency to prop up the dollar, there is a very deep liquid market that could easily absorb the selling. But if the U.S. government tried to sell a significant quantity of Bitcoin, the market would crash. In fact, the only reason that Bitcoin is, knocking on the door of 100,000 and probably going to be through by the time anybody sees the interview, right? Yeah. But the only reason it's there is because everybody expects the U.S. government to buy millions of Bitcoin, to spend billions and billions of dollars, waste taxpayer money, which I think is really the ultimate irony because Bitcoin was created as supposedly this is the alternative to government, where it's decentralized, we're rejecting fiat money and government, yet now it's completely dependent on government because it's the government that's creating all the demand. And so it's not that the free market is choosing Bitcoin. It's that government is using the coercive power of the state to basically force people to buy Bitcoin. Because when the U.S. government buys Bitcoin, I'm an American citizen. I'm not choosing to have my tax dollars used to buy Bitcoin. Right? The government is doing that against my will. But what's happened is you had all the money in the Bitcoin industry, the crypto industry, was able to corrupt all these politicians by donating to their campaigns and funding them. And the payback, right, with the return on that investment that they're looking for is the government to buy Bitcoin. They also want the government to make the gains on Bitcoin tax-free so they can sell all their Bitcoin to the U.S. government and pay zero taxes on the gain. So it's a great deal for them, but it's a disaster for the country. Hopefully, Donald Trump, stands up to this and doesn't sell out the country to the crypto crowd.
All right, we got 8,000 tons of gold on the balance sheet, the largest gold reserves in the world, priced at $42, $22 an ounce. I mean, what about Cynthia trying to say, okay, let's put this at current market value?
Well, it's already at current market value. Everybody knows what it's worth. Nobody claims that it's $42 an ounce, and the government certainly wouldn't sell it for $42.22. It just shows you how much value the dollar has lost since we went off the gold standard. Now you need $2,700 to buy what you could have bought for $42. And in fact, you could have bought it for $35 in 1971 when we closed the gold window. So that price doesn't mean anything, and it doesn't create some kind of windfall to say, oh, let's value it at the market and then sell it, get rid of our gold. Right. That would be the worst monetary mistake the U.S. can make. Remember, the British sold a bunch of their gold back in 2000. They marked a low. They sold at about $250 an ounce. Now, certainly, it's higher price now, but given all the inflation that's been created and will be created, makes no sense to sell it, especially if the goal is to buy Bitcoin instead of gold. Because Bitcoin has none of the attributes that give gold its value. It's counterfeit gold. I said it's fool's gold, and it would be horrible if the U.S. Taxpayer, American public, was the final bag holder in Bitcoin. The exit strategy for the guys that got in early in this Ponzi pyramid chain letter, however you want to describe it, they ran out of chain in the free market. They got Wall Street involved with all the ETFs, but that couldn't do it. And that I think if Trump had lost this race, Bitcoin would be collapsing right now. So rather than being, almost at 100,000, we'd probably be below 50,000 and falling fast.
Talk to me a little bit about MicroStrategy here. I mean, I know that you talked about it before, and I'll get you out of here. You got to go on the stage. But the short report by Citron, are you shorting it too?
Well, I'm not short MicroStrategy. I mean, I think it is a great short if you've got the staying power to stay short. Who knows? I mean, maybe, look, we had a big one-day reversal day on Thursday where stock made a new high and then closed significantly lower on the day. It took out the high and the low of the prior day. It didn't have a reversal week, but so that's potentially a sign that maybe we've seen a top. But it's this thing has been such a beast. But if you understand the dynamics of how this works, I mean, you see that it can only end in the bankruptcy of MicroStrategy, because what MicroStrategy does is they take on debt to buy Bitcoin, and as they spend that borrowed money on Bitcoin, it pushes up the price of Bitcoin, which then pushes up the price of MicroStrategy stock, which enables them to borrow more money and sell stock. And one of the reasons that people are willing to buy, or the main reason that they're willing to buy MicroStrategy, even though it's trading at 3 times the value of its Bitcoin, forget about the underlying software business. I mean, that's worthless. The company is losing money as a business, right? It just claims to make money on the appreciation of its Bitcoin. But the reason that people or funds are willing to buy Bitcoin is they're operating under the false belief, or buy MicroStrategy, is they're operating under the false belief that they're getting Bitcoin without the downside risk, because they're buying these convertible notes where, worst case scenario, they just get their money back. So what they do is they give up some interest for a few years and they get a free ride on Bitcoin. Bitcoin goes up, MicroStrategy goes up, they convert and they win. But if Bitcoin goes down and MicroStrategy stock goes down, they just get their money back. Well, the problem is MicroStrategy is promising to pay so many people back so much money that it won't be able to do it if the price of Bitcoin goes down, because it doesn't have the money, because it wasted it on Bitcoin. And so the only way it would be able to repay all these convertible notes if Bitcoin goes down is to sell its Bitcoin. But as the biggest buyer and biggest owner, if it becomes the biggest seller, what happens to the price of Bitcoin? It crashes. So I think the only way this is going to end is in the bankruptcy of MicroStrategy. And in a MicroStrategy bankruptcy, where all of the creditors force the liquidation of all the Bitcoin, Bitcoin also collapses.
Okay, I'm going to get you out of here, but in one of your recent interviews, you said that one of the regrets is not buying Bitcoin very early on. I mean, it's going a little bit viral on X right now. Do you think it's absolutely too late to get in?
Well, first of all, it shows you how ridiculous the Bitcoin community is. If I make an obvious, admission, who doesn't regret not buying Bitcoin when they first heard about it, right? It's almost $100,000. I heard about it when it was around $1. Right? So yes, I could do the math and how many billions I would now have had I only bought my Bitcoin and not sold it or not lost it or whatever. But I mean, it would be ridiculous for me to say I didn't regret buying it, but I certainly wouldn't buy it now. And of course, I've said that every time I said because I regret not buying it with the benefit of hindsight, seeing what's happened, right? Doesn't mean that now I want to buy it. And obviously, had I bought it way back then, I'm sure I would have sold a lot of it. Maybe I would have sold it all by now. I don't know. But I would certainly be a seller. I wouldn't be a buyer had I bought it way back then. Why would I be buying more? And I'm certainly not going to start buying it now.
Well said. All right, Peter Schiff, thanks, man. I appreciate it. We'll get you on stage.
Take care.
Thanks again.
Kitco News special coverage of the New Orleans Investment Conference is brought to you by Uranium Energy Corps and U.S. Gold Mining.